All right, the market is in full on crash out mode, but this is why you shouldn't panic, okay? I feel like I need to get on here and give some perspective because I know there's a lot of fear mongering and there's a lot of people panicking, okay? So let's just hop into the cues. I just want to talk about the cues today. I'm not going to make this video too long. I just want to show you what's going on. The overall market has been up, okay, for the better part of the past 4 years. It's just been straight up, okay? Every every now and then you get these pullbacks, okay? These are natural pullbacks. These are pullbacks that are needed whenever you get these really big rally, okay? From the lows in March, we did move about 33 to 35% rally. From that rally, we hit all-time highs at 748. Then with this current sell-off, we're pushing about 11.5%, almost 12% correction, okay? There's no need to be worried yet about the market going into a bear market. The levels you need to watch are these levels. These are the levels that we struggled in last year, and that's the level we broke out in April. I feel like I've been talking about this every video. Until we start breaking these levels, there shouldn't be any reason to think we're going into a bear market. If we do break these levels, and even if we do break these levels, you want to see how the market reacts. If we kind of get some kind of retest and we fail on the retest and we start pushing lower, closing these gaps, heading back to these lows, then and also the 160 moving average start curling over, then you can start worrying, okay, we're going into a bear market. Until then, what you're going to watch for is these levels to hold as support. Maybe we get some kind of pushback down there. I mean, we don't have to trade all the way down there, but if we do trade down there, watch for some kind of bounce, okay? Also, 160 moving average is still trending higher, and that's one of the moving averages that I use, okay? As long as we're above the 160 moving average, we're still in a bullish trend. Yesterday we had this big sell-off, but it's because the nonsense going on in the Middle East, the strikes. You have oil because of the strikes. You got the oil, you have oil trading higher. You have the Fed talking about raising rates. I mean, there's a lot of things going on in the market right now, okay? So I understand why people are fearful and why people are panicking. But until we start breaking these levels, breaking the 160, breaking these levels about 638, 640, there's no reason to panic yet, okay? Let's go down to the 4 hour. Today we're rallying, and we're rallying right around this level that I spoke about in the past, the 665 area, okay? This is key and this is important. You have the 20 moving average steep in decline. So what you're going to watch for today is also we have been respecting the 20 moving average. So if we start rolling over, you need to be careful because we could take these lows out, okay? However, if we do get a push higher, you're going to wait for the pullback because whenever the 20 moving average is in this steep of a decline, I'm going to repeat it, and you get a push higher, at some point you're going to get a retest. You are going to have to wait until the 20 moving average start curling in order to confirm that the trend is changing. You need the 20 moving average to start curling. You want to get some kind of retest, and then you want to break over the previous highs. Until that happens, then we're still in this downtrend. But still no need to panic because we're still holding these levels and we are still above these previous breakout levels, okay? So do not panic. I'm not telling you that the market is not going to crash and we're not going to go into this crazy bear market. I'm just saying until we hit those levels that I just spoke about, we're still in an uptrend. 10, 11% pullback after a 30% rally is a healthy pullback, okay? There's no need to panic, no need to worry. Just sit on your hands if you're a swing trader. Wait for the bounce, wait for the confirmation that we're gonna head higher, and then you can get in and ride the trend back up to maybe the top of the range. right? And who knows, maybe we don't hit the top of the range anytime soon, but that's why you don't get in right now. You don't get in, you don't buy the dip right now because you're trying to front run the, the move. You wait, because even though I am bullish on the market still, and I am saying the market is trending higher and in the overall uptrend, the market could sell off and could continue to sell off. There's a lot of uncertainty in the market right now with the rate hikes, the Middle East, a lot of things going on. So we could sell off. I'm just giving you guys some perspective and some areas to watch, okay? These are the areas to watch. First level will be the 160 moving average. The next level is going to be about 638, somewhere there. If we do break those levels and you start seeing the 160 start curling, then these are levels you need to watch, because there's a gap to close right here. And I mean, may God help us if we break these lows right here down there at 550. But that's a long way down to go, okay? That's a long way. There's no need to be worrying about these levels right now because we're nowhere close to those levels, okay? Watch for the bounce off the 160 or the bounce off the previous breakout level. If we can't bounce those levels, then we might be in trouble. But until then, there's no need to panic. If you're a long-term investor, you sit on your hands and you wait. If you're a swing trader, you sit on your hands and you wait. If you're a day trader, go ahead. Go crazy. All right? I just wanted to get on here and let you guys know or give some perspective, okay? Do not panic.